Why you might want to hold cryptocurrency as a long-term asset. With the pandemic still causing public and business worry around the world in its second year, it's natural that shaky feeling manifests itself in market volatility. Maintaining a tight check on your investments or potential investments is critical to the portfolio's performance. That is true for any asset, including cryptocurrencies, which have grown in popularity as quarantined individuals test the market waters. However, how do you choose investments and determine how long to hold them in an unstable market? One of the keys to efficiently managing your possessions is your capacity to diversify. Diversification is critical. When you invest in an asset, you implicitly state that you believe it will appreciate in value over time. You would not purchase it otherwise. However, buying low, holding, and selling high is not as simple as it sounds. External factors both locally and globally play a significant role in deciding the price of an investment. Given the inability to foresee what will happen tomorrow or the next day, it is prudent to diversify your holdings across sectors. This manner, if one industry, say cryptocurrencies like Ethereum, ETH, rises and another, say healthcare, falls, your whole portfolio suffers the least amount of damage. Volatility can be beneficial. With cryptocurrency volatility dominating the news today, you may consider avoiding the digital currency industry entirely. However, substantial market swings are not always a bad thing. Bear in mind that you only incur a loss or gain when you sell an asset. Thus, purchasing cryptocurrencies through a business such as HODL and hodling it to round out and diversify your portfolio may add the risk component necessary to achieve your final financial goals. Not to mention, HODL allows you to earn money on your crypto assets without trading anything. How cryptocurrency can fit into your long-term portfolio. Although cryptocurrency is a relatively new asset class and is popular with day traders looking to profit from the ever-changing market, this does not mean Bitcoin, BTC, and other cryptocurrencies are just advantageous in the short term. If you want to hold cryptocurrency as a long-term investment, it's similar to adding stock to your portfolio. Consider your investing objectives and determine whether your present assets will produce the desired outcome over time. If the answer is no, it may be time to consider incorporating a digital currency into your financial plan. That being stated, properly study each investment asset prior to making a commitment or seek guidance from a financial professional with knowledge in crypto. Conduct research, invest, and make adjustments. Your investment portfolio is a dynamic collection of assets that fluctuates over time as a result of events outside the investor's control. Because you will never know precisely when to enter or exit the market, it is essential to establish your objectives, conduct research, invest, and monitor your investments closely. Ascertain that your portfolio remains on pace to meet your financial objectives and make any adjustments to your holdings. Whether you add and hold Bitcoin, Apple, Etsy, or any other trading asset, the key to success is remaining vigilant, preparing to ride the waves, and maintaining a laser-like concentration on the long-term reward.